Well, hi, Linda Austin.
Hey, Amber.
How are you?
I am doing great today. Thank you so much for asking. Look at the weather over your shoulder. It's
I know.
amazing.
It's beautiful. This is not a virtual background. This is an actual background, and I'm sitting outside on my front porch. But and it's November, and November is the month of Veterans Day, which is kind of what inspired me to do this video with you because you are a specialist in VA loans, right?
Yes, I consider myself somewhat of a specialist. I do know that I really enjoy working with veterans and their families. So it's really driven me to learn a lot about the loan program.
See, I think that's great. And it always reminds me because every Veterans Day, I usually get a little note from you and little interesting information about the VA loan. But there's something I wanted to do this video about that I knew you could speak about. And it not only does it include a VA loan, but it also includes FHA loans and USDA loans, which are types of loan products that are used for all different types of clients. First of all, let me say that Linda Austin is with VanDyk Mortgage. So sorry, I didn't put that in there. And she is a loan officer and a loan originator, and she does do all types of loans, but her specialty is VA loans, and she knows a lot about it. So this is something really interesting, Linda, and I want you to talk a little bit about it. So those three types of loans, the VA loan, the USDA loan, and the FHA loan are all what we say are assumable loans. So can you tell us what an assumable loan is? This is very exciting.
I'll do my best. And it really is exciting, especially in this high interest rate environment where it just seems like there's no good news for borrowers and then by default sellers in this real estate market these days. So if you know a seller, someone wants to sell their house and they have a government guaranteed loan, and specifically we'll talk about VA, but again, Amber's absolutely right. It includes FHA loans as well as USDA loans. Those loans can be literally taken over or assumed, right, by a buyer. And that's pretty exciting when you think about what an opportunity that could be on many levels for a first time, second time step up home buyer in this particular market.
Right. I mean, the loan rates 6 months ago, a year ago, were hovering around 3%. Now they're kind of going between that 6 and 7, and maybe even closer to 8 at times. It kind of pops up. So if someone had bought a house, like this seller bought this house with a VA loan, and they had a 3% interest rate, this buyer, a new buyer, they decide to sell their home. This new buyer could potentially take over their loan or assume their loan at that 3% interest.
Correct. Not only at the 3% interest, they take over the loan term. So, however many years the seller has left on the loan, that term is assumed or transferred. Um,
So
we
they
already
don't
talked
start
about
over at 30 years. So they could,
no,
if the seller had already paid 5 years into this 30-year loan, then the new buyer takes it over at the same interest rate and 25 years left.
that's right. That's right.
Oh, wow.
Yeah. So that's a huge advantage. And just to speak to your point about interest rate, um, the difference between the principal and interest difference between a house, let's say we're talking about a home that has a purchase price of $260,000. A year ago, if the person who bought the home, the current seller, financed that at 3.5% fixed interest rate over 30 years, their principal and interest payment, they would have been making a payment of around $1,150.
Okay.
That same home, if a buyer goes out to buy it today, purchase price $260,000. Let's say they make a very minimal 3.5% down payment, but their interest rate is at 7.5%. The principal and interest payment is over $600 more a month for the
So they're
same.
like, so they're paying a difference of maybe $1,100 to $1,700.
That's right.
Yeah. And
That's
so it
right.
kind of affects the
That's huge.
purchasing power for a lot of buyers, especially first time home buyers, where they might have been able to afford a little bit more house. And
Hmm.
now this may give them the opportunity to do the same, afford a little bit more house, or they're not,
Yeah.
they're saving some money each month too.
Hmm. Right. $600 a month times 12 months. That's $7,200 a year. That's
Oh, I
money
can,
that the buyer needs to keep in their
so
pocket.
many things I could do with that money.
Right. That's right. Okay. So I just a couple of things I wanted to let your audience know, Amber, that in order to assume a loan, the buyer does have to be able to qualify for a mortgage. Okay. So you still have to have your credit has to be good. You should have a little bit of money in the bank. The bank is going to look at your credit score, your credit report, and they are going to look to make sure that your debt to income ratio will fit to make this home purchase and that you can easily and responsibly buy this house. Okay,
Yeah.
that still matters. So it's not just anyone can come up and say, I want to assume your house. The
No, I'm glad you said that, because I think that people would think, oh, great, I'll
Sure,
just take it right
I'll just
over.
take it right
It's
over.
it's like a rental or something. It's not the same. You're right. They still have
No,
to qualify and apply and all that good stuff. They
correct.
just they and obviously they have to be eligible through that as well.
Yes.
Okay.
So another thing you and I talked about that might surprise people, though, on the other hand, is let's say that a veteran is selling his home and he has a Veterans Administration or a VA mortgage on it. If a non-veteran wants to buy that home, they can. You can assume a VA mortgage without having to be in the military or retired military or considered a veteran. So that's
Oh,
pretty exciting.
wow. Yeah, that's really great,
Yeah,
actually. That's super
yeah,
cool.
yeah.
I did
Yes,
That's something I did not know. So that's news to me too. See, I always learn something new every time I talk to you.
thanks. There are, each of the different programs we talked about, VA, FHA, USDA, to assume one of those loans, each of those different loan programs has different guidelines, different pros, different cons, and you definitely would want to get with a professional realtor like my friend Amber, as well as partnering with a terrific lender who
Like my
can
friend
help.
Linda.
Thank you. Who can help you, with those ins and outs to be sure that you're educated and that you do your research, do your due diligence before seriously looking into buying a home using an assumption. But it is an excellent strategy to use in this particular market.
Yeah, I love it. And I think from a seller's point of view, like if you're a listing agent, you're the agent who's going to be selling the home, listing the home like this, and you know that your seller had this loan, this would be a great opportunity to market it that way too. So, I mean, you could really up your buyer pool with that. And then, of course, with the buyer, it's going to be much more attractive, and you might go into competitive multiple offers, which we're not seeing quite as many these days, that with the shift in the market. So, oh my gosh, I just love this. Thank you, Linda. So,
Welcome.
Linda, I'm going to share Linda's information in the email as well, but where can people reach you? Do you have a preferred email or preferred phone number where people can get in touch with you if they want more information about this?
Yes, text is the best way to reach me. And you can text me at area code 513-444-0159. So that's my best number. And if you didn't catch that, reach out to Amber. She knows she can get us connected.
Oh, I can track you down. I know where you live too.
This is true.
Well, thank you for all this great information. I'm going to put a link to your information down on the email as well, so people can also reach out that way or get more information that way. So thank you.
You're so welcome. And one last thing I wanted to mention, I forgot to mention this as well. An assumption, another great feature of assumption is it can oftentimes save you money in more than just interest rate. Fees are generally lower, and in most cases, no appraisal is necessary. So please do reach out to me to find out more and to Amber, and we'd love to help you buy your next home.
All right. Thank you.
Thank you. Be well.